Thursday's shortened session was a calm, low-volume affair. While certainly unusual for 2020, it was typical for a Christmas Eve. Unsurprising was the recent cluster. Will Americans get $600 or $2,000? Well, don't hold your breath. Based on the market reaction, it appears the stock market believes some kind of stimulus deal will happen, so don't sweat the details. In other news, strategist Sam Stovall delivered some impressive market data and a warning from history. According to Stovall, this bull market celebrated its 9-month anniversary on December 22nd, with the S&P 500 gaining 64.8% in price. This return was more than twice the average of 32.2% for all bull markets since World War II and ranks it number 1 out of 13. Stovall went on to say that following these typical jackrabbit starts, bull market advance rates typically slowed, posting smaller compound annual growth rates during the remainder of their bull market runs. So, let's take a look at our charts. And before we take a look at our charts, 1, 2, 3, 4, 5, 6, 7, 8, 9, 0 dash lowercase a has requested how we set up the charts. Now, here's your stock chart settings, and again, we're looking at realtimestockquote.com, and they are not a paid sponsor of this video. I simply have authorization to use their charts. And as you can see here, and you can pause your video, but I've got the chart set up for the 1,500 for the width and height, and then the indicator size is 300. Font size is 12. The rest you can take a look at. We changed the time frame here and then the frequency here when we're looking at, say, weekly and monthly charts. I use the linear scale moving up here. I also use the exponential moving average of 20, 50, 200. Now, I believe that all these settings are the default settings. I've been using this website for years and years and years, so I'm not sure if my settings are what are the default. But I would say stick with the default, whether or not I use those settings. Moving on down here, you can click on any of these oscillators that you want. It's just that I happen to like the MACD. The MACD histogram, as you can see, I've clicked blue there. Moving down here, price rate of change, relative strength, stochastics, volume, and then the Williams R. And now for additional information, if you want to know about each oscillator, you just simply highlight here and click on it, and that will bring you to an explanation of what it is. All right, we're already set, so let's go ahead and take a look at the charts. Moving up here to the price chart, you can see that we've been riding along the 20 EMA for almost 2 months now. We're getting closer here. I think things are starting to erode, but I also think that we may reset for another little small leg up. Again, we're just looking at the 6-month daily. Let's go down here into volume. You can see that volume dropped off, but that's not unusual for a holiday week. Now, what does sort of not alarm me, but is a red flag, are these sell-off days here, here, and here. Now, moving on down here, you can see that the MAC, fast line, and slow line are both moving on down. Now, this is divergence with regard to the price chart. We'll talk about that in a second. Moving on down here into the histogram, you have pretty much the same thing, that everything seems to be moving down. As you can see here, the price rate of change is also moving down. But I think things are going to reset, and they're getting near those zero lines, and so I think they're gaining some steam. Not quite yet, but I think they'll gain some steam for another little run on the upside. You can see here relative strength has bounced on that 50 line a couple of times here, and it does want to reverse only mildly. Here into stochastics, you can see that the fast lines run down below that 50 or midline, but I think it's starting to turn here, so it may bottom or base in this area. Pretty much the same as the Williams. It's already hit that bottom and heading back on up. So I do think there's a strong possibility, or should I say a probability that the market is going to move up. Again, we're looking at the S&P back here to the price chart. So as you can see, a lot of those oscillators are divergent compared to the price chart. The price chart's just been going sideways, say, for the last couple of weeks or so, but it's been riding along that moving average. And I think we're coming down here, and I think it's going to get a reflection on up. That's what I see. One more time into, say, the stochastics. I think this is going to come down. I think it'll slowly bottom and then maybe head on up. Again, some of these other oscillators, there's a good one. Price rate of change is coming down to that zero line. It may gain enough steam to get a reflection on up. So that's what I'm expecting here, at least in the short term, and perhaps through the end of the year. And so, Merry Christmas and Happy New Year. And for today, that's ChewDog Charts. Thank you.